Hello, good morning, ladies and gentlemen. How are we all doing today? Hope you all had a wonderful weekend. Let's quickly confirm that we are good to go here. So if you can see my screen and you can hear my voice clearly, I would really appreciate that you type in hi in the comment section so that we can get the session started. So let's see what's happening in the comment section. So if you can see my screen and you can hear my voice clearly, I would appreciate you typing some hi in the comment section so that we can get this started. So let's see what is happening right here in the comment section. What do we have here? All right, I see you, Carrie. Good morning. Thank you very much for that confirmation. Gatukila, good morning. 6019, good morning to you. 424. All right, Yusuf J says he's new here. Glad to have you around. So try to stay tuned in with us so that you don't miss out on any of the advices and review we are going to be treating, and with time you get to understand how this works and you will be able to use it for your benefit. Okay, 424, thank you. Thank you for that confirmation. Okay, so I would like to take this as a confirmation that we are good to go this morning. I'm excited to welcome you to yet another promising session on the X-Trend Speed Live. My name is Sheriff Daramola, and as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. Well, it's the first day of the week, and as usual, we are going to be taking random pairs, after which we are going to be using whatever pairs we have deliberated on today or reviewed today as a basis for monitoring market activity throughout the week. So whatever we choose today will be the pairs we are going to be monitoring throughout the week. So this is a very good opportunity for you if you have any commodity instrument whatsoever you have that you want us to review. This is the most appropriate time to drop them in the comment section so that I can inculcate it into our plans for today. So with that being said, we shall be diving right into the market right now. And the first thing we're going to be doing as usual is to check on the economic calendar, as we are going to be looking at the major macroeconomic events that will be driving price action for this week. And after looking at the economic calendar here, I think we have a series of macroeconomic events that we shall be looking forward to based on the instrument I have chosen for the week. And what we have here is we don't have anything for the pounds, we don't have anything for the Japanese yen, but we have something for the Japanese yen tomorrow. That's on Tuesday. The Bank of Japan's governor is going to be having a speech. This is a high macroeconomic event we also want to be looking forward to. Then on that same Tuesday, we have the Fed's chairman's speech also coming up on that same day. Then on Thursday here, we have the consumer price index. It's also a major event participants in the market will be looking forward to. Then on Friday, we have the publication from the Michigan, that is the consumer sentiment index. And what we have here, if you look at the consensus for the consumer sentiment index, we have a 61.6 against the 59.7, and that's some level of positivity for the US dollar. So let's see how this is going to be affecting price action. And obviously participants in this market will be looking forward to all this event, and we shall be seeing the anticipation of this event reflect on the charts as price action. So let's dive into the chart and let's look at what we have here from a technical standpoint. So the first commodity we are going to be looking at this morning is the US oil, and as you can see here, I already have a position triggered here right above the $75 level. And if you remember last week, we had a beautiful channel between the $75 level here, which has been serving as a selling niche here, and then we also have the $73 level, which has been serving as a support level for that channel. And remember last week we've been expecting price to either break out or break down of that channel to give us a confirmation for where price will be going. And in fact, we saw a breakout of this channel this morning above the $75 level, giving us a very, very good opportunity to join that bullish momentum to the upside. And if you have been part of this trading journey, kudos to you for being on standby to catch this move, as you will currently be running with over 160 pips in profit. But before we go into the details of what our expectation is going to be like for today, at least for the New York session, it's appropriate that we scale up to the daily time frame and let's have an holistic view of what has really been going on in this market. And for the sake of those who are not part of our live session last week, this will be a very good opportunity for you to be in alignment with what our expectations are on the X-Trend Speed Live. So right now we shall be scaling up to the daily time frame. And what do we have here on the daily time frame? Hold on a second, I'm trying to load up my chart here. All right, so here we are on the daily time frame, and for the sake of this session I will be scaling into the current structure, and that is between the last quarter of last year and the present moment is what we are going to be looking at this morning. And look at what we have here on the daily time frame. The first thing you would observe here is that we have a bearish trend line which has been guiding bearish momentum since the month of June last year. And after connecting the series of lower highs here, we were able to identify this bearish trend line, and as you can see here, it's emphasized that sellers are still very strong in this market. And if we zoom into what has been happening here since the month of September, we can see that price was at one point in time caught within a consolidation phase between the $93.50 level, which has been serving as a selling niche at this current structure, and then we have the demand zone sitting somewhere around the $75 level, a very key psychological level, and that level has also been holding by pressure since on the September of last year. As you can see, every attempt by the sellers to break down that structure has been met with strong resistance from the buyers. The same thing also happened here in the month of November. We also saw buy pressure coming around that level. But when we look at what happened at the first week of December, we saw the final breakdown of that demand zone. At least the first time in the last 3 months, we saw the breakdown of the $75 level, emphasizing that the sellers are still very strong in this market. So we saw a little buy pressure come in around the $70 level, which took price action to the upside. And as soon as price tested the $80 level the second time here, the couple of days before the end of last year, we saw multiple rejection of the $80 level by the sellers to emphasize some selling strength around that area. And at the beginning of this year, we saw the rejection of the $80 level, followed by an engulfing candle which took price to the downside. And lucky enough for us, last week we were able to join this decline below the $80 level, and we rode the move all the way down into the $72 area, as you can see here, and we were able to make over 1,000 pips with multiple entries on that one. And in fact, the US oil has started the year on a bearish tone, and this is the worst start for a year for the US oil in the last 20 years thereabout. So at this point in time, we had the breakdown of the $75 level last week. Remember how important the $75 level is. I showed you here how this level has been a major niche for buying pressure. You can see what happened here before the breakdown of that structure happened on the first day of the month of December. And last week again, we saw the breakdown of that structure one more time to emphasize some selling straight at that point. So with the current structure we have here following the breakdown of the $75 level, there are two possible situations that we want to be looking out for today and for this week. One is the situation where price might come back to do a retest of the $75 level to incite another wave of bearish momentum. That is one possible scenario that could likely happen. Or we could have a situation where price comes back into the $80 level. Remember that level also shares a confluence with that bearish trend line we identified earlier, and price might likely respect that trend line one more time to incite another bearish move. That is one possible scenario that could happen also. And if you look at what we have here, we have a high and low. Price has been unable to break the previous low that we had here on the first week of the month of December at the $70 level. And for me at this point, we might be having a situation that might lead to price breaking out of the bearish trend line here, where the bearish trend line will no longer have the capacity to hold selling pressure. And if you look at that structure, it also shares a confluence with that important key level at the $80 area. So if price continues to the upside, breaking out of the $80 level, breaking out of the bearish trend line here, then a buy pressure right above the structure will be giving us an opportunity to buy the US oil or add more position to our existing trade. Like I said, we already have a buy position running at this point in time. So let's see what is going to be happening for today. So what we are going to be doing right now is to scale down to a much lower time frame, where we want to be understanding what is really going on around the $75 level, which is likely going to be a key level that we shall be using to guide our trading activity for this week. So in that regard, we shall be scaling down to the lower time frame, and let's see how participants in this market has been reacting to the $75 level since the beginning of this week. So in that regard, I will be scaling down to the 1 hour time frame here, where we'll begin to see things more clearly. So I'm having a little bit hitch in my internet reception this morning, and let's try this out for some couple of minutes and see if it works out. And if it doesn't, I will just have to switch on to my second router. Okay, so let's load this up. Okay, while the chat loads up, I would all right, here we go. I want to load up the 1 hour time frame so that okay. So here we are on the 1 hour time frame. What's happening here? Okay, let's just switch to the next router here so that not sure what's happening here. All right, I think this is going to be better. The strength on the signal is quite good. All right, good. We have a better network right now. So this is the 1 hour time frame on the on the US oil. And last week we had this beautiful channel between it's a $2 channel between the $75 level and the $73 area. And I remember last week we were able to join this bearish move. Hold on a second. Still bringing me back to my daily time frame. Uh-oh. Hello. I'm having a terrible situation with my network here. Okay. So sorry for the break in transmission, and I hope things work out better this time. Excuse me. So right here we are on the 1 hour time frame. And remember last week, we started the year on a bearish note as price action dropped below the $80 level one more time. And then we rode that move all the way down into the $73 area. And since price tested the $73 level, we have been witnessing we have been witnessing a situation where price action has been caught within a $2 channel that is between the $75 level and the $73 area. And one thing we stated here last week, towards the end of the trading session last week, was the fact that we want to remain patient here to look out for a signal that might likely come in the form of a breakout of this channel, or probably a breakdown of this support level of this channel to give us a signal of where price will be going. And like I told you earlier, I told you that we already have a breakout of the $75 level, and that gave us an opportunity to join that rally to the upside here. And for those who are taking advantage of this opportunity, well done to you guys. Kudos to you. And what we want to be doing at this point is to lock in some profit, and the most appropriate area to lock in some profit here is probably somewhere around the $75.50 level, which at one point in time has been a structure for selling pressure. So we want to look at that area right below that structure to lock in some profit. And now at the beginning of this week, the $74.50 level appeared to be the support level for this week. As you can see, the week started with a bullish gap as price closed at the $74 level last week, but opened right above the $74.50 level. So at this point, this level will be serving as our support level for this week. So now with the breakout of the $75 level, and for those who had missed out on this opportunity right above the $75 area, well, at this point, let's see if the market will be giving us a second chance to join that rally to the upside. That is for those who had missed out on that opportunity, and for those who are already in this position, well, let's see if the market will be giving us an opportunity to add more position to our existing trade. So right now, oh, my chart just went out again. Okay, so here we are. So right now we are at a prices approaching a key structure now at the $77 area. And let's see how important the $77 area is so that we can have a better perspective on how to plan against this a retest of the structure in the nearest future. So now this is the situation we have here on the 4 hours time frame. And remember, we have the $77 level holding buy pressure at one point in time during the last week of last month. We saw how that level has been a strong buy niche for participants in this market, and it also shares a confluence with that bullish trend line that we have here. However, a breakdown of the structure last week is a very good sign that sellers are still very strong in this market. A breakdown of both the bullish trend line and the $77 level is a very good sign that the sellers are still very strong in this market. And right now that price is heading close to the $77 area, a level which at one point in time has been holding by pressure. Well, we will... Okay, oh, my chart just went out again. So with price approaching the $77 level right now, we need to be very careful at this point in the market, as there is a tendency that price, as soon as it gets into the structure, we could be seeing reversal patterns around that area, characterized by selling pressure on our lower time frame, probably to incite another wave of bearish momentum. So we need to be very careful at this point. So if you had missed out on the breakout of the $75 level here, let's remain patient and see how price action will be reacting to the $77 area, a structure which was broken last week. And if price breaks out of that structure, then with buy pressure around this area on our lower time frame, then we want to be getting ready to join another wave of bullish momentum. So what we are going to be doing here is to remain patient. Let's see if price breaks out of the $77 level, and if it breaks out of that structure, we want to be adding more position to our existing trade. And if you are not yet in this trade, this will be a good opportunity to join that potential rally to the upside. Our take profit target at this point should be falling somewhere around the $80 area, an area which shares a confluence with the bullish trend line, which we identified last week. Remember, we had this bullish trend line. Price action has continued to respect this bullish trend line since the beginning of the month of December. We saw how that trend line has been respected. So the breakdown of that trend line here last week is a sign that we might be having a retest of that structure. So in the meantime, we shall be placing our take profit target somewhere around the $80 level. So that's how we are going to be looking forward to trade the US oil for this week. So remember how we are going to be patient around the $77 level, where I said we could have selling pressure come in on our lower time frame, and if it does, then we get ready to join that decline to the downside at the site of a reversal pattern. It could be your double top structure, your inverse, your head and shoulder pattern, or probably a rising wedge, whatever it is. If it falls into a structure that supports a move to the downside, then we want to be getting ready to join that decline to the downside. But if price breaks out of the $77 level with buy pressure sitting right above the structure, then we want to be joining a rally to the upside. So that is my view here on the US oil. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section of this video. So I will be taking some 10 to 15 seconds to read through the chat and see if there are any questions whatsoever before I move on to the next option. So what's happening right here in the comment section? So let's see what we have here. Okay. All right. So in the absence of no questions, I want to assume that we are on the same page here. So please be on standby to catch the move when it happens. So the next commodity we are going to be talking about this morning is the US tech. And before I go into the details, let's quickly run through the daily time frame to see to have an holistic view of what is really going on in this market. So right here on the daily time frame, we have so right here on the daily time frame, last week we were able to identify the fact that price action has been on the bearish momentum throughout last year. And as you can see here on my daily time frame, we were able to connect the series of lower highs here, which gave us that resultant bearish trend line, which has been guiding bearish momentum throughout the course of last year. However, things got a little bit interesting as soon as we got into the month of June. As you can see here, as buyers came in to negate all selling pressure. So every attempt by the sellers to break down the $11,000 level was met with strong resistance from the buyers. The same thing happened here in the month of September stroke the first day of the month of October. We saw buy pressure come in here, and we were thinking of we saw this buy pressure here, but it appears that the buy pressure here wasn't as strong enough. As you can see here, as soon as price tested 11,700, we begin to see selling pressure come in from that area. And what I want to buttress here is the $11,000 level, which has been holding buy pressure in the most part of last year. Second half of last year, we saw how that level has been holding buy pressure in this market. And look at what we have here at the beginning of this year. That same $11,000 level has been holding selling pressure. So what we are going to be looking forward to here is a breakout of the $11,000 level to give us an opportunity to buy the US tech. In as much as we still remain right above that strong demand zone here, I will be tending towards a buy bullish bias on the US tech. So let's scale down to the lower time frame. Let's see how participants in this market has been reacting to the $11,000 level since the beginning of this week. So in that regard, we shall be scaling down to the 1 hour time frame, and let's see what we have here on the 1 hour time frame. So on the 1 hour time frame, we shall be looking forward to see how price action is reacting to the $11,000 level, and we shall be using whatever structure we identified there to determine what our next line of action will be. So right now, hold on a second, let's pull out the 1 hour time frame. I'm sorry for the slow internet reception this morning. I don't know why both my routers are experiencing almost the same issue. Okay, so here we are on the 1 hour time frame. And remember last week we were part of this buy position above the $10,700 level here. And then since the beginning of the year, we have been witnessing selling pressure right below the $11,100 level. So you can see how that level has been holding selling pressure since the beginning of the year. So at this point, we need to be very cautious as price is currently oscillating around the $11,100 level. And if we look at what has been happening here since the beginning of this week, we can see that price has been caught within a channel that is between the $11,050 and the $11,100 level. And with the situation we have here, it's a good sign that there is an indecision in this market as price continue to juxtapose between the structures here. So what we have here is a resistant level sitting around 11,100 Sorry. Sorry. So we have a resistance level between the 11,100 and we have a support level around 11,050. And following the impulsive move that led into the situation here, there is a possibility that the structure here could transition into a trend continuation pattern in the form of a bullish rectangular pattern where a breakout of the $11,100 level here will incite another wave of bullish momentum. So that is one scenario we might likely look forward to for today. Then the other possible situation that could happen here is if this turns out to be a reversal pattern, then we want to be seeing price action break down the $11,050 level, which is the support level of this channel, to incite a sell-off situation here. And if a further breakdown of the $11,000 happens, then we want to be adding more position to our existing trade. And one thing about this structure is that if price action breaks down the $11,050 level here, then we want to be seeing this move as a counter trend opportunity where it will lead into a possible retracement of this impulse leg that we have here. So what we are going to be seeing here, hold on a second while this chart load up. So this impulsive move, we might, if price breaks down the 11,050, then this is likely going to be a retracement of that impulse leg. And if we look at what happened here on the last day of last week, we saw how price action broke out of this trend line here. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that price is likely going to come back, do a retest of the structure in anticipation of another wave of bullish momentum. So what we are going to be doing here is to project where price might likely culminate if the breakdown of the 11,050 happens. And to do that, we will need our Fibonacci retracement tool. And if we run it through the previous impulse leg here, we want to be citing an area between the 50 and the 78.6% of that previous impulse leg to guide our trading activity for this week. So at this point, I will be labeling this area a TP target for sellers, and this area will also be serving as a potential buy zone should we start seeing buy pressure come in from that area. So we'll place this right inside that box and we give this a yellow color for the sake of clarity, so we have something like this. So what I'm simply saying here on the US tech is that if price breaks down the 11,050, then we want to be selling. If for the breakdown of the $11,000 level here should welcome additional position here, and we're looking at our TP target sitting somewhere around the 10,890 and the $10,770 level. And if you look at the zone here, it also shares a confluence with the bearish trend line that was broken during the course of last week's trading session. So this is what we are going to be having here for today on the US tech. So that is how we are going to be selling the US tech for today. If price breaks down the 11,050, we look out for selling opportunities. But if price breaks above the $11,100 level here, then we look out for opportunities to buy the US tech for today. So these are the scenarios we shall be looking forward to. If you have any questions, feel free to drop your inquiries in the comment section of this video. So moving on, we should be talking about the USDJPY. And on the USDJPY, we'll quickly run through the daily time frame. Sorry about this buffer as we open up the daily time frame. So here we are on the daily time frame. And on the daily time frame here, remember last week we identified a simple structure here on the daily time frame, which we said we shall be using to guide our trading activity for the year. And what we were able to identify is the 131.131.00 level, which has been a major determinant of price action throughout the course of the second half of last year. If you look at what happened here in the month of May, we saw how that level was holding selling pressure at one point in time, as you can see here. And when price broke out of the 131.00 level in the month of June, we saw that price has continued to trade above that structure, as every attempt by the sellers to break down this level has been met with strong resistance from the buyers here. So we see that every time price comes within that level, we saw buy pressure. We saw one happen here in the month of August. We saw another one happen here in the month of June. And last week, we saw this buy pressure that took, we were able to join this rally to the upside, which gave us over 850 pips on the USDJPY. And with the situation we have here, price continued to oscillate right above the 131.00 level. And with the current scenario we have here, as long as price remain above the 131.00 level, we continue to look out for buying opportunity on the USDJPY. This buffering is quite erratic this morning. Is unusual. Okay, so we have the 131 level here. So what we are going to be doing right now is to scale down to the lower time frame. Let's see how price action is reacting to this current structure here to decide if we are going to be buying or selling the USDJPY. So what we're going to be looking forward to here, a further breakout of this trend line should further give us a confirmation that buyers have come to stay here. But if a breakdown of the 131 level happens, then we want to be looking forward to selling the USDJPY. But to understand this better, let's scale down to the lower time frame and see what is really going on around that area. So in that regard, we scale down to the 1 hour time frame. And let's see what we have on the 1 hour time frame. Let's see how participants in this market has been reacting to this current structure. So right on the 1 hour time frame here, this is what I was able to identify here on the 1 hour time frame. First of all, since the beginning of the year, we noticed that price action has been on a bullish trend. Remember, we took advantage of this bullish trend last week. And if we connect the series of higher lows here, we have this temporary bullish trend line, which was finally broken on the last day of last week. And we also took advantage of that bearish opportunity, which led to the breakdown of that structure. So at the end of last week, we saw our price closed around the 132.00 level. And one thing we wanted to be doing here is to see how price action is going to be reacting to the 132.00 level here to decide what our next line of action will be. Now, at the beginning of the week, we saw how the week started on a bearish note. So we have the resistance level for the week sitting at the 132.250. And then we saw the bearish move into the 131.350 level. So at this point, we already have a channel to work with for this week. We have the channel between the 132.250 and the 131 0.350 level. So whenever we have a simple setup like this, we either look out for a breakdown of that channel to give us an opportunity to sell, or a breakout of the channel to give us an opportunity to buy. And in this case, we already have a breakout of this channel at the 132.250 level. As you can see here, I already had a buy position triggered at this point, and we already have this buy position running right now. So what we are going to be doing now is to continue to join this rally to the upside as price action remain above the 132.250 level here. So as long as price continues to remain above the 132.250 here, we continue to look out for buy opportunity to guide our bullish momentum, to guide this buy position here. So what this simply means is that above the 132.250 is a very good area for us to join this rally to the upside. So price action will continue to go to the upside, as you can see here, and for this point in time we should be having our take profit target sitting somewhere around the 134.500 area, where we want to be looking out for how price will react to that structure to decide if we are going to be adding more position to our buy trade, or we are going to be joining another reversal from that level. So at this point in time, if you are part of this trade already, kudos to you for being on standby to catch this move. And for those who had missed out, well, let's see how price is going to react to this current structure. So since we already have a breakout of the 132.250 level, there is still a tendency that price will come back and do a retest of that structure. As you can see here, it also shares a confluence with that bullish trend line that we have here. Then you could join that rally to the upside from this point. Now there is a catch to this current structure that we have here. So as soon as price continues to the upside and it gets into the 133.400 level here, we want to be moving our stop loss accordingly to lock in some profit, and let's wait out to see how price action will react to that level. And considering the bearish momentum we saw here last week, this might likely be a situation where price comes back into this level to incite another wave of bearish momentum. So this is why we want to make sure that as soon as price tests the 133.400, we move our stop loss accordingly, lock in some profit, and wait out to see how price action will react to that level. So this is what we are going to be looking out for around the 133.400. First of all, if we sight a breakout of the structure, price find buy pressure right above this level on our lower time frame, then we want to be adding more position to our existing trade. But if price gets into the 133.400 and instead of breaking out, it starts rejecting that level, and when we scale down to our lower time frame, we start seeing selling pressure come in from that level, then at that point we want to be joining a breakdown retest of any reversal pattern that we can identify there on our lower time frame. And if this leads to a further breakdown of this bullish trend line, then we want to be adding more position at the site of selling pressure around this area. So it's a simple setup we have here on the USDJPY. Let's hope that we ride this move all the way up into the 134.500 if the market permits us on this one. Now, the contrary situation that could happen here, like I said earlier, is that we have two parameters to guide our bullish momentum here. The first one is the 132.250, and the second one is this bullish trend line that we have here. So what this simply means is that as long as price remain above both the structure here, we continue to remain comfortable in our buy position. But if price breaks down the structures that we have here, then there is a tendency that sellers could likely come in at this point. So a breakdown of this bullish trend line could incite another wave of bearish momentum. So let's keep that at the back of our mind as we continue to guide our bullish position here judiciously. So now we'll move on to the next pair, and the next pair we shall be looking at this morning is the XAUUSD. And on the XAUUSD, let's quickly run through the daily time frame so that we can have an holistic view of what is really going on in this market. Well, I will just zoom into the current structure here, which is above the $1,800 level. This is where price has started this year. As you can see here, we had the breakout of the 1,800 at the beginning of this year, which gave us a good a new hope for the gold. So we wrote this move all the way up last week. We had over, I think, over 4,000 pips here on the XAUUSD last week, and price action has continued to trade above the $1,815 level. So what we are going to be doing now is to scale down to the lower time frame. Let's see how price action has been reacting to the 1,860 level since the beginning of this week. So scaling down to the 1 hour time frame here, what can we find here on the 1 hour time frame? So right here on the 1 hour time frame, this is what I was able to identify on the 1 hour time frame. Let me delete this one so that we can have a clean chart here. So this is the situation we have here. Price action started the week at the 1,865 level, and price continued to climb to the 1,880. Remember, we had the buy position running here. So if you were in the buy position, you held the buy position over the weekend, well, at this point, I would advise you to move your stop loss according, lock in some profit here, as there is a tendency that sellers could come in at this point. And the reason why I'm saying this is this. Look at how price started the week. It started at the 1,865, and this level is going to be serving as our support level for this week with this current situation we have here. And the next thing we observed, hold on. Okay, the next thing we observe here is that as soon as price tested the 1,880 during the early hours of today, we are beginning to see sell pressure come in at this point. And what I did here is to scale down to the lower time frame to see if there is an opportunity for us to sell the XAUUSD this morning. Now, scaling down to the 15 minutes time frame, this is what I was able to identify here. A simple double top structure. As you can see, we saw the impulsive move this week. Price came to test the 1,880. We had a little touch of the 1,876 level, which is going to be serving as a neckline from this point. Then price action came to the 1,880. Then we saw the breakdown retest of this neckline, giving us an opportunity to sell the XAUUSD. So I had a position triggered right below the $1,876 level here, as you can see here, and price has continued to trade to the downside on this one. So if you had missed out on that opportunity, well, we could also take into consideration another structure that is sitting somewhere around here. That is the $1,872 level. So let us label this area for the sake of clarity. So we have the $1,872 to guide our trading activity for today. So what we are going to be doing for those who had missed out on the breakdown of the 1,876 level, let's see if price action will break down the 1,872, take out the buy position there, then we look out to sell right below that structure. And if a further breakdown of the 1,865 happens, this will give us another opportunity to add more position to our existing trade. Then another breakdown of the 1,860 is another opportunity to add more position to this trade on the XAUUSD. So with the current situation we have here, we have possible multiple entries on the XAUUSD, and I wish that we be on standby to catch this move when it happened. So a further breakdown of the 1,872 should be giving us an opportunity to add more position to our sell position here. Now, if the contrary happens at this point, that is, price does not go as far as breaking down the 1,872 and instead it continues to find higher highs, well, I would advise us to remain patient and wait out for a breakout of the 1,880, taking out all the sell position here, gain some liquidity to incite another wave of bullish momentum. So for buying the XAUUSD, we want to be seeing price action breakout of the $1,880 level. But as long as price remain below the $1,876 area, we want to remain comfortable in our sell position on the XAUUSD. So it's a very simple setup. Let's be on standby to catch that move when it finally happens. Then let's move on to the last pair we are going to be talking about for today, and that is the GBPUSD. Now, on the GBPUSD, let's quickly run through the daily time frame so that we can have an holistic view of what is really going on this pair. So last year on the GBPUSD, we observed that price action has been on a bearish tone, and as a result of that, we had this bearish trend line figured out here. As you can see, price continue to respect that bearish trend line throughout the course of last year, and not until sometime in the month of November last year we saw the breakout of that structure. And this was as a result of a bullish momentum that started the month of September here, and when we connect the series of higher lows here, we have that resulted bullish trend line to guide bullish momentum since in the last 3 to 4 months now on the GBPUSD. Though the year started on a bearish note, we saw our price action started below the 1.2400 level. In December, price dropped into the 1.200 area. We saw a little consolidation phase around here before the breakdown of the 1.2 level happened. And as soon as price tested this bullish trend line, what did we notice? We noticed that bullish momentum came in. In fact, it was an engulfing candle that broke out of the 1.2 level. And at this point, you would agree that we are at a critical point in this market where price action meets at a confluence between the bullish trend line and the very important key level we have here at the 1.200 level. So at this point, there is a tendency for price action to go either way. We could have a bullish momentum here. Price, we're expecting that bullish trend line to continue to find higher highs, or we could have a breakdown of the 1.200 level to incite another wave of bearish momentum. So in order to have a better perspective into what is really going on here, we want to be scaling down to the lower time frame to see what structure we have here to determine what our next line of action will be. And when I scale down to the 4 hours time frame, I was able to identify some a simple setup here which we can use to guide our trading activity for this week. And what I have here on the 4 hours time frame is quite simple here. If you look at the current structure we have here, since the beginning of this year, we saw that the 1.2, hold on a second, the 1.2100 level has been a strong selling niche for participants in this market since the beginning of this year. As you can see here, every attempt by the buyers to break out of the 1.200 level has been met with strong resistance from the sellers. And in fact, we also have a demand zone sitting around here, and this was broken a couple of times during the course of last week. We had one here on Tuesday, we had another one here on Thursday. We had a couple of breakdown of the 1.200 level to further emphasize some strength for the sellers at this point. So during the later part of last week, following the NFP, which came out positive, we saw the bullish momentum which brought price back into the supply zone that we have here. So at this point, there are still a tendency that price could drop below the 1.2100 level. So, and if price drops below the 1.2100 level here, we want to be looking out for selling opportunities. Remember that this area is still a strong sell window, a supply zone, which has been respected consistently well in the last 2 to 3 weeks now. So let's see how price action is going to be reacting to the 1.2100 area during the at the beginning of this week. So in order to understand this, we want to scale down to 1 hour time frame. Let's see how price action has been reacting to that structure. So right now we are on the 1 hour time frame, and let's zoom into the current structure here. And this is the 1 hour time frame, as you can see here. And at the beginning of this week, we have a situation where price started the week at the 1.20850, breaking out of the 1.21 level, where we saw price climb to as far as the 1.21800, and as you can see here, we have been witnessing a sharp rejection of this level. So for the sake of this, let's adjust this supply zone to the 1.21800, which falls, is it 1.21800? Okay, 1.21700, I guess. So we should be having the resistant level for this channel at the 1.21700. So let me readjust this 21700 for the sake of clarity. So we have the resistant level for the week around this area. So if you are taking advantage of the bearish momentum here, kudos to you for being on standby to catch that move. But if you are not, well, then let's hold on and wait out for a breakdown of the 1.21 level and the 1.20850 to join that decline to the downside. So what I will be suggesting us to do here on the GBPUSD is to wait for a breakdown of the structure, retest of this level, then we could join that decline to the downside. So an outright breakdown is okay for us to join, and if price action comes back to do a retest of that structure, then it will be a good opportunity to add more position to our existing trade. So to buy the GBPUSD for today, we don't want to buy unless price action breaks out of the 1.21700 to give us a confirmation that buyers are still very strong in this market. So as long as price remain below the 1.217, we continue to look out for selling opportunities. And in addition to this channel here, I was able to identify this trend line here, which we can also use as a guide for trading activity for today. So we have the connection of the higher lows here. So we have that. So as you can see here, we already have the breakdown of that structure. If price comes back to do a retest of that level, then we want to be, and we cite selling pressure below the structure, we want to be joining that decline to the downside, and a further breakdown of the 1.21 level should give us another opportunity to add more position to our existing trade here on the GBPUSD. So we continue to look out for selling opportunities as long as price remain below the 1.217, and look out to add more position at the breakdown of the 1.21 level. And buying the GBPUSD will only happen if price action takes out all the sell position here to give us some liquidity for buy momentum to happen around this area. So this is what we are going to be looking forward to on the GBPUSD, and this is going to be the last pair we are going to be treating for today. So before I drop the curtain here on this live session, let's quickly run through do a quick recap of what we talked about today so far. So the first commodity we looked at this morning is the US oil, and on the US oil we already have a buy position running after the breakout of the $75 level, which we identified last week, where we said we either wait for a breakout or a breakdown of that structure to give us an opportunity to either buy or sell. And in fact, we have a breakout of the $75 level, and for those who have taken advantage of that move, you will currently be running with over 150 pips in profit. Well done to that. And the next thing you want to be doing is to lock some profits below the below the $75.60 area. Lock in some profit there, and let's see how price action will play out from this area. And for those who had missed out on this opportunity, I have told you that you want to remain patient here, and let's see if price action will come back, do a retest of the structure to incite another wave of bullish momentum. And if that does not happen, then we wait for price action at this bus stop here at the $77 level. Remember, the structure has been a strong demand zone in the past, and we had the breakdown of the structure here last week. So we want to see how price action is going to be relating to this channel to the structure here during the New York session today. So what we are going to be looking forward to here is if price comes within this level and if price reject that area and we start seeing selling pressure on our lower time frame, which might likely turn result into a reversal pattern, then we might be getting ready to join another bearish move to the downside. But if price breaks out of the $77 level here, followed by buying pressure around the structure, we want to be adding more position to our existing trade. So that is that on the US oil. Then we went on to talk about the US tech for today. And on the US tech, we were able to identify a simple setup here in the form of a flat channel, and price action has remained between the 11,100 and 11,050 since the beginning of this week. So at this point, we want to remain patient to look out for either a breakout or a breakdown of this channel to give us an opportunity to buy. So what we are looking forward to buy is a breakout of the 11,100 level to buy the US tech. And if price breaks down the $11,050 level, we look out for selling opportunities, and a further breakdown of the 11,000 level should give us an opportunity to add more position to our existing trade here on the US tech. So it's such a simple setup. Let's be on standby to catch that move when it happens. Then we went on to talk about the USDJPY here. And on the USDJPY, remember we also had a channel here between the 132.250. We have the resistance level since the beginning of the week here. We have the support level for this week at the 131.350. So what we said is a breakout of the structure should give us a buy opportunity, and the breakdown should give us a sell opportunity on the USDJPY. And what we saw this morning was a breakout of the structure. I told you I already took advantage of that opportunity there, and for those who are taking advantage of that, kudos to you for being on standby. Let's see how far this bullish momentum will go. And for those who had missed out on this opportunity, well, let's remain patient and wait for price action to probably come back, do a retest of the 132.250, look out for buying pressure on our lower time frame, and join that rally to the upside here. And a further breakout of the 133.400 should be giving us another opportunity to buy or add more position to the USDJPY. So for the buy position here, we have a TP target sitting somewhere around the 134.500, where we are going to be waiting to see how price action will react to that level to determine what our next line of action will be. A breakout will give us an opportunity to buy, and the appearance of selling pressure below the structure at the 134.500 will give us an opportunity to sell from that structure. Then we went on to talk about the XAUUSD, and on the XAUUSD, hold on a second, I'm trying to load up my chart here. All right, here we go. We have it here now. Okay. So we have the chart loaded now. So on the XAUUSD, I think that was the last pair we talked to. Okay, XAUUSD. Okay, so on the XAUUSD, we already have a sell position running at the breakdown of the $1,876 level, and I've told you that as long as price remain below the $1,876 level, we want to be comfortable in our sell position. And right now we already have a breakdown of the 1,872, an opportunity to add more position to our existing trade here. So let's continue to move our stop loss accordingly to guide this move all the way down. So a further breakdown of the 1,865 will also trigger another position here. So let's continue to guide our bearish momentum to the downside on the XAUUSD. And I told you here that we are not going to be thinking of any buy position right now unless price breaks out to retest the $1,880 level. Then we close the day with the GBPUSD. And on the GBPUSD, hold on a second, let me try and load up my chart here. And the chart is loading just quite slow. So we have the GBPUSD here. So since the beginning of the week, we have a beautiful channel between the 1.21700 and the 1.20850. And in addition to the channel is this bullish trend line, which I said we shall be using to guide trading activity. And this trend line has been broken to the downside, a very good signal that sellers are likely going to be coming in at this point. So if you had missed out on this opportunity, let's wait out for price to come back and do a retest of either the 1.21500 level, where we look out for selling pressure below the structure to join that decline to the downside. And a breakdown of the 1.21 level is another good scenario to add more position to our existing trade on the GBPUSD. So for the GBPUSD, we continue to look out for selling opportunities as long as price remain below the 1.21700 level. And for buying the GBPUSD, I would advise that you hold on to see price break out of the 1.217 level, taking out all the sell position here to give us an opportunity to buy the GBPUSD. If a breakout of the 1.217 doesn't happen, please don't think of buying the GBPUSD from this current structure. So on this note, I would like to call it a day. I really appreciate every single one of you, though we had a little itch in our network for today, and that resulted in the buffering you have been experiencing so far. I'm sorry about that, and we will try as much as possible to resolve this issue before tomorrow so that we can have a better experience. So thank you for being around till this moment. I really appreciate that. And one thing I would like to say here, like I always say, is that always remember not to get too excited whenever you're trading the financial market, as a breakout of a structure is just only a signal. As soon as you have a breakout of a structure, we want to be scaling down to the lower time frame, where we are going to be looking out for retest of structure to confirm that price is actually going in that direction. And when this happens on our lower time frame, at that point in time, we want to see that as a mature situation for us to join whatever direction the breakout has happened. So thank you once again for watching. I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we get prepared to review all the pairs we've talked about today and get prepared for the New York session tomorrow. Do have a wonderful evening. Bye bye.